Welcome to the Breakaway Wealth Podcast, where we discover wealth strategies for the unconventional and rebellious. And today with me is my good friend, my mentor, my teacher, that for many years has helped me understand what's really happening out there in the world with money. And I couldn't think of a better guy to have on as our first guest for this podcast is R. Nelson Nash. And Nelson is the discoverer and developer of the infinite banking concept, or IBC, as we might call it today, and the vernacular that we use. And he's the author of Becoming Your Own Banker. It's a national bestseller with over 300,000 copies sold. Nelson's written several other books, and his newest one, A Case for IBC, is a great book too. If you haven't read that, make sure you get a copy. But the book that has had an incredible impact on my life is Becoming Your Own Banker, because it lays it out just in such clear form what really is happening. And as Nelson says in the book, and he says in a lot of his seminars, if you know what's happening, you'll know what to do. He's also the co-director of the Nelson Nash Institute, which is committed to helping people understand what's happening with banks out there and how to become their own banker by taking over the banking function in our lives and their lives. So Nelson spent over 60 years of studying economics and Austrian economics, which we're going to talk a little bit about today. And Nelson, welcome to the Breakaway Wealth. We really appreciate your time and are excited that you're here.
Thanks for the opportunity. Can I correct a mistake back there earlier?
Absolutely.
It's 400,000 plus copies.
Oh, 400,000. I got bad information then, Nelson. Yeah. I'm sorry.
All right.
And I think that I might be responsible for at least a couple thousand of those copies that I've read.
Thank you.
And we're going to give a special offer actually with the book at the end of the podcast, but they got the listeners have to listen to the podcast to understand and get that offer. How's that?
All right.
But Nelson, just to start off, I mean, as I mentioned, the people that know you, know your background and know where your heart is and where how this all came about. But just tell me a little bit about your background.
Born in 1931, depths of the Depression, Greene County, Georgia. I guess when I was about two, father and my family moved to Madison County, Georgia. It's north of Athens. My father was a tenant farmer for his father in Madison County, Georgia, up to the time that I was, say, 4 years old. We moved to town, Athens, Georgia, at that point. I didn't know what electricity in a home was until I was 7 years old. I didn't know what indoor plumbing was until I was 10 years old. We were dirt poor as far as financial stuff, but we were rich in Christian heritage. I became a Christian when I was 9 years old. Now, so government thinking persisted everywhere. And I came face to face with a mental paralysis caused by socialism. Now, Jim, I didn't know anything about socialism. I knew something inherently was wrong because of my Christian upbringing. Now, I'm very proud of the fact that Economics 101 in undergraduate school, I made a D plus. That's Delta plus, not Bravo plus. Okay. Now I'm proud of that because I didn't have so much nonsense to wash out of my brain.
That's right.
But I saw something was wrong because I kept running into this government thinking. And I'm mouthing off at a social gathering at the home of this radiologist about what I run into. He says, sounds like you need to read this book. Gave me a copy of Henry Hazlitt's Economics in One Lesson.
Great
Read
book.
this.
Yep.
All right. So in the next 10 days, I got it back in his hands. Sir, I have two questions. Where you guys been hiding this stuff? Second question, why did you hide it from me? He said, well, if you like what you read, get on this mailing list of this journal called the Freeman, put out by the Foundation for Economic Education. Well, that started it right there. The more I read, the better it got. And it became an obsession. And so I've spent over 61 years now studying Austrian economics. Now, I guess we need to touch on that a little bit. There's three schools of economic thought out there in the world today. The entire world is wrapped up with that fool named Maynard Keynes. Now, the world is in the grip of that guy's ideas, and they can't possibly work. Now, there's the Chicago School. Now, that's Milton Friedman. Well, everybody calls him a free market economist, but if you'll go read David Stockman's 719-page called The Great Devolution, about 2/3 of the way through the book, you'll find out that it was Milton Friedman that convinced Nixon to come off the gold standard. Well, what happened since then? Golly.
Right.
He was a monetarist. Now, only the Austrians have got it right. The Austrian school of thought started in Salamanca, Spain, back in 300 years ago, migrated over to Vienna, hence the name Austrian. And the real hero that came along was Ludwig von Mises. Now, Mises was out of step with the rest of the folks there in Austria. He started out with their stuff, but he saw that something was wrong because Carl Menger and Eugene Bobberwerk influenced him big time. And they were the ones that were early pioneers of the Austrian school. Well, Mises could explain away the nonsense of socialism so effectively that when the Nazis were coming into Vienna during the early part of World War II, he was high on their hit list, Jim. He could explain away the nonsense so effectively, but also he was Jewish, and that didn't help out. So
Right.
anyway, he and Margaret escaped with whatever they could put into suitcases to go to Switzerland. And the last 4 years of his work were lost as a result. Well, they were still after him, although he was living in Switzerland, and they didn't want to be a burden to the Swiss. So they made contact with Henry Hazlitt at Foundation for Economic Education, Irvington, New York. And that's how they came to the United States. And
Wow.
they made that their base of operations for the rest of their life. Now, you see, the Foundation for Economic Education got started in 1946 by Leonard E. Reed, who was my personal friend and mentor. What a fantastic experience that was. But Henry Hazlitt was one of the co-founders. But there were several other guys that were sugar daddies to get all this going. But I got acquainted with those folks, you see, in 1957. So that's been my background since. And so if it hadn't been for Austrian economics, we would never be talking, because my book, Becoming Your Own Banker, would never have been written.
Right. Well, and that's, and I think that's an important foundation to establish before we dive into the book and talk about becoming your own banker. Is you grew up very poor, so who taught you about money? Well, you learned about money not in your 200 plus credit hours in college. You learned about money after college, and you learned about money from these mentors and books. I mean, thank God that this book was referred to you, and it's a great book, by the way. If any of the listeners haven't read this book, Economics in One Lesson is a great book. There's a couple of books that I think are kind of foundational to understand Austrian economics and understand free market. I think The Law is a book that should be read by I would make it a requirement to graduate from high school,
Yes.
junior high, because
Yes.
you should be able to read that book in a couple of hours. And I'm being kind to the slower readers out there. And that's great to understand that foundation. And then when we look at your book and we tear it apart, and I could tell you that I know that book page by page pretty much. I mean, there's pages I know better. But what we really have to talk about is kind of like you said, that socialism, the government control is, Nelson, a really simple question. What's the problem with banks?
Yeah, they're evil to the core. See, you really can't understand this. Just in the last year, so much has shown up that now it's a very clear picture. All the writings and so forth that we've been exposed to, you and me, they've shown historical events that covered, a relatively short period of time, say 20 years or something like that. And most of the stuff as it relates to our monetary situation right now, we're talking about a very short time frame. But to really understand that, people have got to understand who Cecil Rhodes was.
Okay.
Now, Cecil Rhodes, we're talking about in the 1890s and 1900s, there was this secret society that he put together that included him and Alfred Milner. The third one is Nathaniel Rothschild, surprise, surprise. Mm-hmm. The other two I can't remember right now, but they're all in this book called Prolonging the Agony, which is everybody needs to read this book to really understand what's going on. The war shouldn't have lasted but 6 months.
Right. Because
all the French and the English had to do was just go destroy the iron-making works that mostly bordered France and Germany. But you see, that's not the object. The object is to totally destroy all of these folks and so forth.
Right.
All right, well, that led to World War II. And what have we had since World War II? Endless wars.
Right.
And you can't really understand the last half of the 20th century unless you go study the Dulles brothers. Mm-hmm. Now, there's about 5 books out there that cover all this sort of stuff. Now, when you understand all that, you'll see how evil bankers are.
Right.
But you see, here's the problem. There's a little 7-minute video out there called The Banker.
It's a great video.
Yes. Well, here's this sophisticated fellow sitting in front of the fireplace reading Aldous Huxley's Brave New World. And he sees a passage that tickles his fancy and he chuckles. He flips the page, reading on. He sees another passage. Then he realizes he has company. You. He lays the book down, turns and faces you. Hello, my name is Montague William III. And what I'm about to tell you, you'd think is absurd. But the less you believe it, the more we like it. Mm-hmm. Because you see, he looks left and right to make sure nobody's listening. I'm in banking.
Yep.
Now, he explains in the 7-minute video, there's only a few of us. And if you understood that, you could put us out of business. Mm-hmm. All right. So IBC is about teaching how to secede from what's going on.
You know, when I first read your book, and in the book, you say that the average American pays 34.5%
Yeah.
of every net dollar that they earn.
Yes.
The first thing that I think about, because of the way that I was trained at that time, is I'm not paying 34.5% interest rate.
Well, of course not, but it's volume. You see, people confuse rates and volume. Rates don't mean a cotton picking thing, relatively speaking. How much is the volume of things? And so what I saw was that the typical American public today has been made a slave by the bankers by, low interest rates and so forth. And now it's everything is financed. And so
Right.
they quit saving because they said the bank says, I'm going to take care of you.
Right.
Yeah, they took care of you all right. They made slave out of you.
That's right.
Well,
You know,
so I just took the car buyer there, and the typical financing package is 4 years, but the 95% of the cars traded in are not paid for. I know all about this. I've spent all time researching this sort of stuff. Well, I looked at the mortgage and so forth and went through the same exercise. The typical mortgage only stays on the books 5 years. Mm-hmm. And then they go to another mortgage, which is usually bigger and so forth. And that the Bank of America and boat payments and stuff like that would rival the amount of interest paid on cars. So you add them all up, it's 34.5. And I've had any number of people challenge me on that. And I said, well, go do your own third grade arithmetic and report back to me. And I never had a single one that didn't say you understated the case.
Right. You know, what's interesting, Nelson, is I was reviewing some notes that I had from Tony Robbins' book from a few years ago called Money Master the Game. Yeah. And I don't agree with everything in his book because he talks and touts a low cost 401k, which we can talk a little bit about qualified plans in a minute. But he echoes the same exact number that you came up with as 34.5% of every net dollar that Americans pay out, the average American. So that number is like you said, it's third grade arithmetic. You do the research and you find it out. But here's the thing that people don't realize, and one of the examples that we show people with Create Tailwind, we show them in our initial consultation or on our initial webinar, is we show people that on a $300,000 mortgage over 30 years, you're going to pay about 48 cents of every dollar that you pay to the bank goes to the bank's benefit, and 52 cents goes to your benefit. Now, I like to ask people, Nelson, if you earned $1 and you got to give me half of it, do you care what your interest rate is? And you know what some people say? They say, yeah, I care what my interest rate is. And I have to say, well, wait a minute, let's go back. We got to go back. You missed something, right? And and you point out that if we're taught to save 10% of what we earn, and we're paying out 34.5 cents to somebody else, then aren't we a slave? Now, I remember I had two African-American doctors sitting in my conference room one day with one of my associates, Jim Anderson, and I said to them that exact same thing. I said, aren't you a slave? And I thought, man, that's not going to go over very well with these two doctors. They're going to look at me like I'm crazy, but they looked at me and they said, wow.
Yeah.
Because it's, once you see and once you understand what's happening, you'll know what to do. So now that we understand that we have this volume of interest problem and that we have to stop doing this or we will just remain a slave for the rest of our lives. And when they put us 6 feet under in the ground, that we just look back and say we were a slave. But how do people become their own banker? What's the first step that somebody needs to do to break away from that system?
It's a mindset. You see, these guys, the bankers, so forth, they have created a problem in people's mind, and they've taken over their minds. Do you know who Leni Riefenstahl was?
No.
She was the gal who did the propaganda films for Hitler.
Wow. Okay.
She lived to be 101. She was a great gal. And there's a quotation I'm putting in this month's banknotes. She says, propaganda will always work if you let it.
Right.
If you let it. And
Right.
see, that's what has happened to people. They have been talked into this sort of stuff by evil people. See,
Right.
Here's my friend Walter Williams at George Mason University. I've been knowing Walter 35 years or so. Great guy. He's always said half the kids in college should not be in college. And so, you know, here's this mindset that everybody's got to go to college. And it's nonsense.
Yeah.
Well, also, here's this goal that we got to have of everybody should be a homeowner.
Right.
Well, the definition of a homeowner inside the Beltway at Washington, D.C. is you have a title to a piece of property, but you owe 1.5 times what it's worth.
Right.
That's homeownership. Well, that's a deception that's out there. And this is a manifestation of the secret elite that started back there in 1890.
Right.
People don't know what's happening to them.
Right. Yeah. In you know, Nelson, you talk about in the book of, and I think sometimes people try to make it too complicated, but there's a page in the book that's somewhere between page 50, I think it would be maybe page 55 or 56. It just says he decides to use his money pool instead of someone else's. Now that's all that's on the page, right?
Sure. Yeah.
Okay, so that message, you know, how does somebody like talk about that money pool, the money pool that the bank controls versus the money pool you could control?
All right, say that again because I'm chasing a thought there.
Okay, I'm sorry. So just talk a little bit about the simplicity of that.
Oh, okay, all right, yeah.
You're using this was your family member using somebody else's money pool, spending a lot of money per month. Yeah. And he just decided one decision. He made one decision in his life that changed everything. He decided to use his money pool instead of the bank's.
Yeah, well, I guess a better way to arrive at what you wanted to get to talk about. I had a client years ago who worked for the telephone company, and his name was Ted Williams, of all things. Wow. He didn't play baseball and so forth. But along comes the high interest rates and so forth, and he says he discovered that he could get enough money to buy a car at 6% interest on his policy, by policy loan. Well, the heck of it is the mindset that prevailed out there. He never paid the dang loan back. He didn't realize that if you're going to be a banker, you should be your biggest customer. And if you're going to be a banker, don't lend money to a fool.
Right.
You got to pay it back to yourself. Yep. Now, when you do, life changes radically. And see, I made all kind of mistakes as the time went by, of course. Look, when I first saw this concept, I thought the smartest thing to do was to go to the very top of equitable life. I had contact with the number one man on a very favorable basis. Let me teach this to them, and we'll change the world. Now, look, home offices of life insurance companies or companies, period, are just eaten up with Harvard MBAs. Yeah. And when you talk about Harvard MBAs, you're talking about manifestation of the secret elite.
Yeah.
When you talk about Yale, you're talking about secret elite.
Yeah.
Just look at all those guys that go into CIA, so forth. you should get a clue from that, so forth.
Mm-hmm.
But you see, here's all these things that they offer. We got to be everything to everybody.
Mm-hmm.
See, for instance, Equitable Life years ago, that was the third largest life insurance company when I got in the life insurance business in 1964. Now, they were the ones who invented group life. That should never have happened.
Right.
That gave people a false impression of they were a security blanket of some sort. And odds are no one would ever, you would ever pay off, so forth.
Mm-hmm.
And when you got out there to the point where you really needed that sort of thing, it had disappeared and so forth. Mm-hmm. Well, they were the ones who invented variable life. Mm-hmm. And that was the brainchild of John Carter, that I knew very, very well. You got to buy a term and invest the difference in a mutual fund and so forth. Mm-hmm. Those things should never have happened.
Right.
Now, they were the first ones to demutualize, okay?
Right.
Now, that's a company that started in 1859.
Wow.
Yeah. Now, they all started out as stock companies, but they very quickly became a mutual company. And then along comes John Carter, whatever, and they demutualized. And because of their Harvard MBA thinking, AXA had to buy them out.
Right.
Yeah,
yep.
Well, you see, but I spent 5 years trying to get this across to them. And I saw they were totally unteachable.
Right.
And then I said to myself, now, Nellie, here you are criticizing those folks, and apparently you don't do much thinking either. I should have learned this in academia, particularly forestry school, because, Jim, a $50 million addition to a paper mill is nothing.
Right.
To produce a product that you blow your nose on and throw in the trash can. Mm-hmm. I said, now think, it's all OPM, other people's money.
Yeah.
I said, now look, the dean of the forestry school at that time, you were in the first class he taught back in 1948, 49. Mm-hmm. Call him. You get an interview based on that relationship. Strap that airplane on your back, go in there and spend the day with him. Run this by him. If he rises to the occasion, then let's establish a chair. They would teach this. And then I was prepared to go out and find the money to fund the chair.
Right.
But all he was interested in, how much you going to give the Alumni Society this year? I'm retiring next year.
Right, right.
Nevertheless, being the persistent fool that I am, I spent 2 years more trying to figure out how can I get this taught down. Mm-hmm. And I finally found out that if I'd give them $250,000, they let me teach this.
Wow.
Jim, they should have been giving me $250,000 to teach this.
Yeah.
Now, what I found out of that 7 years activity, mental paralysis in home offices of corporations is legendary. Mm-hmm. But in academia, it is worse.
Right.
But yet people spend enormous amounts of money sending their kids to college to get that kind of indoctrination. I didn't say education.
Right. Yeah, it's funny that you say that because, we don't learn about money in school.
No.
Right? We don't learn about money from our parents because like you and like me, our parents didn't have any money. So how did they know about money and how did they know how to accumulate money? But you want to keep people ignorant so that you can control them about money. And that's where the elite comes in.
Yes.
And when we sit there and tell people and we educate people every single day on how money really works and how money flows, because as you point out in your seminar that now is only available on DVD, but back in the day when you would travel the United States about 50 times or more a year sharing this information, right? How many times?
And Canada.
And Canada. Yeah, we can't forget our friends in Canada.
Thank you.
Sorry about that, Jason. But what is that you would talk about how money flows. Now, we're not taught to have money flowing, but as you so eloquently point out, movement is a law of God. If air doesn't move in and out of our bodies or flow through our bodies, excuse me, or blood doesn't flow through our bodies, we die.
Yes.
Water doesn't flow, it becomes stagnant. And if money doesn't flow, what happens, Nelson?
Well, it just sits there. It's absolutely worthless. Unless it's at work out there, it's worthless. But you see, what people don't understand is when you put in money into life insurance that's been around for a couple of 100 years, good Lord, life insurance companies cannot possibly inflate the money supply.
Right.
Only banks can increase the money, can inflate the money supply. So why in the world you don't do business with those folks?
Yeah, you don't. And the thing that I think people don't realize is that when you have money in the right type of life insurance contract, and this is not your uncle's life insurance contract based on death benefit. This is the same goals and the types of insurance to create cash and to have a bigger money pool. Then what most people don't realize, including most insurance agents, is that when you take a loan from that insurance contract to go do something with it, either save interest or earn money, is your money doesn't go anywhere.
No.
Your money stays there and grows uninterrupted.
Sure.
And as our friend Carlos Laura likes to talk about uninterrupted compounding in his presentation in your seminar.
Yeah.
It's amazing. Now, Darren Hardy, he wrote a book called The Compound Effect. And he's talking about how little things add up to big results. And he uses an example that I'm sure that you've seen and that you've looked at is you take a penny and you double that penny every single day.
Yeah.
And then at the end of 31 days, you have $10,737,000 and some change. Now, if you take some of that money out along the way, the effects of that are brutal to your balance. And I'm not going to give away some of the numbers, but if somebody wants to see that example, you can look in Darren Hardy's book, but also we do that example in our initial webinar with somebody to show them how to become their own banker, because, really that key of knowing and understanding what's happening. And again, I love that quote. If you know what's happening, you'll know what to do.
Yes.
But one of the things that you think of is that you have to think. You've said mindset. This is a participatory sport.
Yes.
This is not giving Edward Jones your money and hope that the guy's the man or woman, when I say guy, I mean man or woman, that representative is going to grow your money. Now, he's going to get paid or she's going to get paid no matter what, right? But that's a non-participatory sport.
Yeah.
Infinite banking is a participatory sport. I mean, you talk about in the book, and I've heard this story, is one of the reasons that you discovered this is because of the interest in the situation that you were in the high interest rate environment. Maybe you never do. I mean, you probably do, but maybe you never do discover this if you were paying 3 or 4% interest on your loans.
Oh, that's a possibility, but there's much more to it than that. Again, most all of this reasoning comes from Austrian background of economics, is the truth. Now, certain things come along that do influence people. For instance, I'm a forester by education, and that's real estate, and I've been around real estate all my life. Now, I indulged. Now, I made several forest property investments and used OPM. And some of it was astounding. We don't have time to go into that as to how effective the OPM thing was, so forth. But, that led to development real estate, and that's where all hell broke loose.
Yeah.
You see, back in the late 50s, or 60s rather, yeah, 60s, 70s. Interest rates was on 90-day loans was 8%.
Mm-hmm.
That was prime. But, you know, in all my visiting with people, I never have found anybody that was prime.
Right. Yeah.
I met one guy who said he was, but I think he was just listening to the gopher that was lending him money.
Yeah.
But so I got used to paying 9.5% interest on 90-day loans for real estate purposes. Well, I made money at it, as I told you, but then I got into development. Well, look, along comes 80 and 81, and prime peaked at 21.5. Well, we're back to third grade arithmetic. Add 1.5 to it, we've got about 23% interest.
Right.
Well, one little card can fall in a house of cards out there, and you're in deep, deep trouble. And anyway, I got caught in real estate development owing $500,000. Well, I also was using partnerships because I always felt that it was safer that way, coupled with the fact that, Jim, if you don't have somebody to share things with, you really don't have much, golly.
Mm-hmm.
And so anyway, several of these were real good friends. But anyway, here was this development project that it was the most beautiful thing you ever seen in your life.
Mm-hmm.
There was a big time lawyer here in Birmingham, one of the principal firms. He owned 35% of our partnership. Well, he bankrupted on us.
Wow.
Jim, we had to cough up to stand for, personal guarantees.
Right.
Or my share was 300,000. Well, that's 800,000 at 23% interest, isn't it?
Right.
Well, that's attention getting when you were just a couple of years earlier expecting 9.5% interest.
Mm-hmm. Right.
Well, so I could get the money at 5, 6, and 8% interest from 3 different life insurance companies. But I discovered that I had not paid anywhere near the amount of money that I needed to be able to get those so-and-sos out of my life.
Yep.
But it was substantial compared to what everybody else does. I was kind of weird compared to everybody else, we put it that way.
Yeah,
But what I saw is that I had to analyze where was I spending money. Mm-hmm. And, I found some cash flow that, okay, we all think that we're doing the best job in the world because nobody does a better job than you and me, right?
Right.
Yeah. But when we get real honest, we found that we aren't as good as we thought we were.
Right.
Now, when I started teaching this concept, I tripled my income, and that helped out a little bit too. And so I started adding life insurance policies as fast as I could figure out how to do it. And I borrowed from the policies to pay off the banks.
Yeah.
Now, I had partners, I told you.
Mm-hmm.
I had one partner that he and I bought a piece of property together, and I bought life insurance on him. He didn't see fit to buy life insurance on me, but that's all right. Anyway, 5 years later, we sold the property.
Mm-hmm.
Now, that was the end of the partnership, but once the policy is in force, they can't take it away from you, can you?
That's right.
All right. Now, he died on me at age 50, sitting in the doctor's waiting room waiting to see him. Died of a heart attack. 3-pack a day man, 300 plus cholesterol. He didn't believe all those numbers, but he died anyway. So now, during the time I owned that policy, I paid into it $47,000 of premium. But I had borrowed out $48,000 because it had grown in value. Now I still had about $4,000 or $5,000 extra that was there. But when he died, tell me what happened to all that debt.
It went away.
And the $207,000 left over tax-free canceled out a lot of mistakes I made in life, right?
Yeah, absolutely.
Well, I had two smaller policies on one of my ex-partners in the life insurance business. And a few years later, he died on me. Now, you see those two death claims there canceled all that $300,000 that I had to stand for with the banker, with a lawyer rather, so forth. Now, it took me 13 years to pay off those so-and-sos. Now, I've run a genealogy check on those folks, and I found there's canine ancestry in their lineage, okay? They're not very nice people, okay?
Right.
Now, once I paid off the policy loans, then I took what I was paying to those folks, and I paid off, once I paid off the banks, rather, now I took what I was paying the banks, and I paid off policy loans. Now, it startled me how fast I paid off the policy loans.
Right. Yep.
Because you see, an account that's building, compounding continuously, is much more efficient than an account coming down.
Right. Yep.
And so anyway, the bottom line is that Mary and I have not seen a bank in over 30 years. Now, that includes also other family members.
Right.
All the money never left our community.
That's right. Right. And when you finance things, and I think that you told me one time, Nelson, at one point in time, you had 45 or 48 policies.
No, 49.
49. Okay. My number was close, and you have given some of those away. But, you know, when I first looked at this, being in the financial services world and some of the concepts, it was really hard for me to change my paradigm because I had been entrenched in this lie of financial planning being the solution for all of my clients. And I remember thinking to myself, I think my first policy was 25,000. Then I did 100,000. And when people look at the amount of premiums that I'm putting through insurance contracts now, some people think, oh my gosh, what is Jim thinking? But here's the thing, is every time that I go and I look at my cash values and I have money loaned out to different loans and all this money is flowing back to me, that my cash values, I'm shocked that every time I look at them that they're higher than I thought that they were going to be.
Yeah.
Now think about that. How many accounts out there in Wall Street do you look at, including your 401k or IRA, and you look at it and go, there's more money in there than I thought there was going to be. Nelson, that never happens, does it?
No, of course not.
Yeah. Well, you know, Nelson, if somebody, obviously the first step for somebody to learn how to do this would be to read your book. Would that be a good place to start?
Well, it's the only place to start.
That's right. You lay the foundation. And then, you know, when you were in college, Nelson, they would ask you to do some reading, right? Some homework, and hey, go read this chapter, these chapters. And then what did they do after that? They did a lecture, right? They did a review.
Oh yeah, right. Yeah.
And you know, that's where at Create Tailwind, we do those reviews of that book with people. And then people understand how they can implement the infinite banking concept. Now, at Breakaway Wealth, we talk about first you have to establish the money pool, which is the infinite banking concept.
Yeah.
All of the uses. Now, I know out of the years that I've been doing this and the people that I've seen, that the amazing uses for people. Now, you take very basic and say, we all buy cars, so let me give you an example of buying cars. But what are some of the things that you've seen people use infinite banking for over the years that is kind of some of the more creative things or some of the things that you've thought are pretty incredible?
Well, let's put it this way. I'm a very patient fella.
Mm-hmm.
Now, if Mary were here and heard me say that in front of you, she would giggle.
Yeah.
She doesn't think I'm patient. But there was this big name lawyer that I was trying to teach this to. And he thought that I was using smoke and mirrors or something like that. That was the phrase he used and such. And I spent 3 years trying to teach him this. Now, that's patience or stupidity, one or the other on my part. Mm-hmm. But I finally gave up on him, and I never talked to him about banking through life insurance anymore, but I did finance his airplane.
And that's, yeah, I mean, the things that I've seen my clients use infinite banking for, and we work with a lot of business owners, we work with a lot of individuals too, but we work with a lot of business owners, and business owners have certain challenges that infinite banking can handle completely. And in your new book, you really focus on the business owner in the beginning of the book and how they use this system to finance the things that are needed for their business. But regardless of whether you're a business owner or a W-2 employee, everyone in the United States, every single person in the United States should take back control of the banking system in their lives.
Sure, that's it. That's why I went back there. When we started all this off back there, you got to understand what is really happening out there. That all the books that you see out there are talking about a very short time frame and kind of taking an aspirin, you might say, for
right.
temporary, whatever. But you got to find out what caused all these things. And right. That's what's happened, is that people have had their brains totally saturated by the banking business to make a slave out of you. And it didn't have to be that way at all.
Right.
You got to succeed. Let's just go back to Leni Riefenstahl. She says, propaganda works every time if you let it.
And if you don't think, right? If you let
sure.
it, things that will permeate your mind. If you don't think, is that right or is that wrong? Let me do my research. Let me prove to myself if this is right or wrong. And, one of the things that when I first started learning about this concept from you, going through your seminars, and I've got it on DVD here too, so because if I miss something, I go back and I find it and I listen to it. And, going back to the basics, Tom Hopkins says a champion goes back to the basics at least once a year. At least once a year, I read every one of these books and I watch these videos to go back to the basics on how do we establish the money pool. Regardless, if you want to be in the real estate business, you want to buy businesses, you want to do any of these things, you have to start with the foundation, which is the money pool. And so, one of the things that we want to do, when you think, Nelson, of, and maybe you've already answered this, but just in a few words, when you think in your life, what was the one thing that happened to you? And maybe it was somebody handing you that book way back when, but what was the one thing that happened to you that helped you break away from the herd and the herd thinking?
Well, that goes right back to my Christian upbringing. Like I say, I made my profession of faith when I was 9 years old, but by the time I was a teenager, I had figured out that I could change the world.
Right.
By changing the way I look at things.
Yeah. It's all about how you think.
Attitude is the most important word in the English language.
Right.
Now, Christians say, no, Jesus Christ is the most important, but no, it's your attitude toward him. How do you look at him? That's right. The problem.
Right.
Jesus Christ doesn't have the problem. You've got the problem.
Right.
By your attitude. Well, if you change your attitude, it's an entirely different world. Well, he didn't change, you changed.
Right. Yeah. And you changed because you listened to the noise of the world.
Yes. That's just it. You see, that's why I started you. You got to recognize what evil looks like.
Yeah.
And I've illustrated what evil looks like. and look, go to my reading list and on the website, and there's about 130 books that are history books.
Right.
And there's only about 105, 110 books on economics. Now, that ought to tell you something, that history is extremely important.
Right.
And you cannot study economics without studying history. That's all there is to it.
Yeah, I think that's in Nelson's website is infinitebanking.org. And if you go on there, he's got a great reading list. And that's a great place to start educating yourself. And just remember that infinite banking and breaking away and having cash flow, becoming financially independent versus a slave that wants retirement, because a slave wants to be taken out of service, which is what retirement means. We want to be financially independent regardless of our age, and we want to do things that we're passionate about, which is showing people how to create cash flow. You have to start here. You have to start with infinite banking. So how do you learn about infinite banking? Well, you have to start with the book, right? And you go back to the Bible. Every principle that you read in this book is nothing conflicts with the Bible. It is exactly what it's all biblical.
True. You
Absolutely.
see, I passed out at the last think tank section. You were there, weren't you?
I was.
Okay, you know, my presentation consisted of 3 articles there. The first article was something that I wrote regarding my Christian experience. The next article was just only 2 pages long, but that 2 pages is the most profound 2 pages I've ever read in my life, by Paul Rosenberg. Mm-hmm. And it's entitled Fish Are the Last and Notice the Water.
Right.
Well,
right.
The water is their environment. Right. And you got to understand what your environment is out there, and you got to understand what evil looks like. If you can't recognize evil, evil is going to get you every time, and you don't even know it.
Right. Now, by the way, evil is sneaky. Satan is sneaky.
Yes.
Like in the Garden of Eden, he was like, "Hey, I'm Satan." What he did is he snuck up on them, sure, just like evil sneaks up on you today. And it happens with our money. And what I like is one of the quotes that I love is that when people say, does money give you happiness? Well, no, but money gives you choices, and choices give you freedom. Freedom gives you happiness, right? To be free to be whatever you want to be. But this is a participatory sport. It starts with reading the book. And one of the things is that we're going to give to anyone that comes on our website, createtailwind.com, all one word, createtailwind.com. If they go in and they register to have a webinar, we're going to show you some very basic things about infinite banking. And then if you'll register and listen to that webinar, we're going to send you Nelson's book for free. Now, as our gift, because we believe that if, just like somebody gave Nelson a book back in the 1950s, that Nelson read the book. If he ignored the book, then we might not be sitting here talking, right? But you read this book and it started you on your path. And we want to start everyone listening to this podcast on their path. And there are I've read, I think, just about every book on this subject that's out there. The good ones, the bad ones. There's not one book that comes anywhere close to explaining this concept as well as this book. It is the book to start with, and it's where the journey starts. So, Nelson, other than this book, what's the one book that you've given away most often in your life?
Richest Man in Babylon.
That's a great book too. And
back when I was first getting started in the life insurance business, I guess I gave away over 1,000 copies of that thing.
Did you really?
Yeah.
Well, one of the things that strikes me in that book is, I try to take books and I try to break them down into just like 1 or 2 or lessons. Is the gentlemen that were in the book, one guy did things differently than everybody else.
Sure.
And he got different results. Surprise, surprise.
Yeah.
He broke away from the herd.
Yes.
right? And that's how we break away. Nelson, I've taken more time than you were so graciously that you've given us, and I really appreciate it, because I think and the audience can probably tell, is you and I could sit here and talk about infinite banking all day long and Austrian economics and the Bible. And one of my fondest memories of hanging out with Nelson was sitting on my couch, and he gave my wife and me and my, I guess she was probably about 5 or 6 at the time, and my probably 15-year-old at the time, a 45-minute Bible lesson that I'll remember forever. And my wife loves Nelson. I love Nelson, and our family. He's just made a tremendous change and impacted our family. And it started with this book before we even knew Nelson. So that's how important this book is for everyone out there, to read this book and understand these concepts. Nelson, anything to add before we wrap it up?
Another thing we can't live without is light.
That's right. I like that. That's
All right. Well, look, God is the source of light. Jesus Christ said, I am the light of the world. No man cometh to the Father except by me.
Yep.
Now, men have the stupid idea that they think they're the source of light, like Cecil Rhodes, etc.
Yeah.
All men can possibly do is reflect God's light. And that's what I've been trying to do. That is all. It's not me.
Right.
It's not me.
Yeah. You're just passing on God's wisdom that God blessed you with to share with other people. And you've done a great job of that over a lot of years and made huge impacts. And you talk about the compound effect that Darren Hardy talks about. So Nelson Nash, who wants to share, that God chose to share this message through, has shared it with people like me and our firm, like Create Tailwind. And then we share it with our clients that share it with their friends. And the momentum is getting bigger and bigger and bigger and stronger and stronger. So Nelson, with that, I thank you very much again. And I look forward to the next time that we're together in person. And I value your friendship and your mentorship. And thank you for coming on.
Thank you for being there.
All right.